afternoon, welcome to the channel and welcome to the week 4 update video. If you're new to this channel, my name is Henry and we are going to be taking a look at the performance of my portfolio over the course of the last week or so. It's been a fairly steady week, fairly flat, no massive moves either way. For those that don't know, this is the desktop version of Trading 212, which isn't as good as the app in my opinion, but it's better for looking at the charts and doing some technical analysis. If we look at the S&P 500 tracker here over the last week or so, you can see it hasn't really moved much, which is okay, and I'm fairly comfortable with that as it continues to consolidate some of the big gains which have been made over the last month or two. So if we pull this up here, you can see the current position of my portfolio, and this is currently filtered by the biggest percentage gains at the moment so far. So we can see Square at the top here, which is up nearly 60%, which is great. We've then got Dark Group, followed by some of the FANG stocks, Facebook, Apple, Amazon and Tesla's in there as well. So some really good early results there, considering this portfolio has only been going about 3 months now. If we move down to the bottom and have a look at some of the stocks at the other end of the scale, you can see Coca-Cola is stubbornly sticking around that mid-40s, was it 45, 74 at the moment, so sticking around that mark. It hasn't really moved much in the last month or so now. I am tempted to add some more just because it's slightly below my average price, as you can see, but I am conscious I don't want to increase my weighting in Coke too heavily. I don't want it to become one of the main holdings in my portfolio, and I'll discuss why exactly I don't want that later in the video. So hopefully that gives you a brief overview of the current stock performance. Now let's dive into the app and have a look at some of the stocks on an individual basis. Right before we do that, please help support this channel by hitting that like button and clicking that subscribe button to follow the performance of this portfolio into the future. We do have plenty of funds, we want to keep investing, and it would be really cool to have you along for the ride at such an early stage. With that said, let's dive into the app. So here we are in the Trading 212 app. Let's have a look at the summary of this portfolio. So you can see here we have been going just probably a day or two under 3 months. So this portfolio is roughly 3 months old now. It's been a great 3 months. As you can see there, we are up 1,956, which is 21.5%. We are in market trading hours, so that will fluctuate throughout the course of the video. As we move across, you can see probably in the last week or so it's actually been pretty flat. Where do we start the week? Started the week, so we've maybe gained £300 or so over the week, which is roughly 3 or 4%. So a good week on the whole, no dramatic moves, certainly nothing like what we've seen in the last month or two, where the market's been really volatile, moving and swinging, 3-4% in a single day in some cases. So nothing like that. It's good that it's settled down a bit, and I think that does consolidate some of the gains that we've made. And now let's move down and have a look at some of the individual stocks. So 3i has done okay the last week or two. We are up, 5% last week, which is pretty good for a fairly low volatility stock. Do like this one. It's starting to creep up towards all-time highs now. I do expect it to break 300 pretty quickly. Apple and Amazon have continued their growth from a couple of weeks ago, slightly more steady, but we're up 5%, just over 5% for the week on Amazon. And as it moves to new all-time highs, it's up at £2,714 or dollars per share now, which is great. We're up 35% in that, which is brilliant. Apple, we are up 40%, and again, it's at all-time highs. I think a lot of people were sort of saying Apple was getting a bit expensive when it hit 330, 340. But it's kicked on, it's gone up towards 360 now. I think one of the analysts last week reappraised their price target on Apple up to $400, which I think has made people more comfortable with its current price. So fingers crossed this will continue to grow from here. We are up 40%, second largest holding in the portfolio, so very happy. So we move down to some of the banks, Bank of America, Bank of Montreal, Barclays. Been pretty steady over the last week or so. What are we? Bank of America down 2%. Hasn't bounced back anywhere near as well as some of the tech stocks, and lingering sort of mid 20s at the moment. My average price is pretty low, 21.37. Bank of Montreal, similar story, up 1%, which is good. And Barclays, we are down 4% for the week, which isn't fantastic, but I'm quite comfortable with my bank stocks. I did get them all at, I've got a really low average price on all of these, so we're at So an average price on Barclays of 89p, and similarly low average prices on my other bank stocks. So I'm pretty confident the prices aren't going to drop to a level whereby I'm going to be sitting on a loss, but obviously we would like those share prices to keep creeping up to improve those capital gains, and hopefully Barclays will start paying its dividend again. I am still getting a dividend from my other bank stocks. Next one to mention, Coca-Cola, which is, as I mentioned earlier, it's really settled in the mid-40s. It has had a couple of spikes back up here in April and here in June. I do expect it to get to those levels again and hopefully stay and kick on, but it does seem to keep falling back to this level, which isn't a massive problem. It's roughly at my average price now, and there is a debate as to whether I should be adding more stocks to this. I do currently hold 9 shares, which is the equivalent to £330. My reluctance is because I don't really want Coca-Cola to be one of the core holdings in my portfolio. And if I start adding more shares and sort of take it above that £400 mark, it does start to become probably one of the top 6 or 7 stocks in the portfolio, which is not where I see it being. I do like the stock. My concern with it is with people being or becoming more health conscious. Will the sales of Coca-Cola decrease over time? And yes, I know they own other brands. One of the brands that I love, which they own, is Costa, which is great. Obviously the coffee chain, which I think adds fantastic diversification to the business. But the trend, or the potentially downward trend in people drinking sugary drinks, does concern me a little bit. So I don't want to be overly exposed in this moving into the future. As we move down, 2 of the best performers here in Dark Group and Facebook. Dark Group is stabilised in the sort of mid to high 800s, which is fine. It did get up above 1,000 pence a share, and I do expect it to get back up there again as lockdown restrictions start to ease and the travel and leisure industry start to open back up again. I think there'll be a lot of people trying to get away on holidays towards the back end of the year, which should really help the airline stocks. Again, I don't want to buy any more of this particularly. It is quite a big share of the portfolio, I think roughly 5%. And whilst I do see the airline stocks improving further as we move towards the back end of the year, I would still consider them risky, and I do want to limit my exposure to them. So Dark Group is my exposure to airline stocks, and it will be my only exposure. Facebook, we are just short of 50% up on this. It was one of my best buys, right at the bottom of the market, and managed to time it really well. This is the biggest holding in the portfolio, worth £750, give or take. All-time highs at the moment. Hopefully it'll continue. If we scroll down here, you can see the PE ratio just short of 31. So while slightly elevated, still quite a sensible level given the continued growth, as you can see here from the income statement, Facebook continues to enjoy. So I would expect that share price to keep on rising. I think it's got plenty of room in it yet. Moving down the list, fairly steady, no big movers here. And the next one I really wanted to focus on today was Square. So Square has moved into pole position in my portfolio in terms of the best performing percentage return, which is just short of 60%. I did buy 4 shares, which is only worth around £225 at the time. In hindsight, I do wish I had bought a bit more. For those that don't know, Square is a fintech stock, and I bought this as almost as a hedge to the traditional banking stocks, given it's now launched Square Capital and is loaning money to small businesses. And I do think it will gain market share from the banks, and who knows, maybe into the future it will take a large percentage of that industry. So I wanted to start an initial position. The plan was to continue building it, but the price has shot up quite quickly ever since I bought. The really interesting thing now here with Square is it does seem to have broken its support level. And to look at this further, let's go back into the desktop version of Trading 212 to have a look at the technical analysis. So we're now back in the Trading 212 desktop version. This is the charts for Square. I've just zoomed in, so I've taken it from 2017 through to today's date. Let's just change this to line, or actually area, to make it a little bit easier to see. So the key point that I really wanted to highlight was the technical analysis and the support level, which Square is now broken. So you can see there's quite a strong level of support there, where we've reached a top roughly here, we've reached a top roughly here, we've reached a top roughly here, and it's always fallen back down, and there's been quite a nice support level roughly here as well. So it dropped a little bit more there, came back up, we hit the support, came down, we hit the support, same again here. Obviously COVID hit, we fell below but very quickly recovered, and then the next level of support on the upper side was here where it reached its all-time high back in 2018, September 2018. So that was really the next big hurdle which we were looking for to break, and this week Square did break that. It broke it, well, last week actually it hit what that was, at $98, and yesterday it flew all the way up to 104. And the importance of this is it's been hitting that ceiling, and then it's reached this second ceiling and it's broken through that. So the exciting thing from here is it could really go anywhere. Now it's broken that sort of mental barrier of $100 per share. It could really go anywhere from here and set new all-time high. So it's quite exciting. I'm hoping that it can get to sort of 120, 130 on this push, which would get me to roughly 100% on the stock, double my money within probably 6 to 8 weeks. Would be a fantastic result. Who knows where it can go from there, but really exciting. Just looking at some of the technical analysis here and trends following. So let's have a look and let's keep track of this and see where it goes. Moving down the list, Tesla, always worth a mention, hovering around that $1,000 mark. A lot of people debating whether it's too expensive. Some people still think it's massively underpriced. The key thing to remember with Tesla is they have their electric vehicle sector. They also have their trucks coming out, their semis, they have their energy company, and they also have Tesla Insurance. So there's a lot of revenue streams there which are continually growing, some which haven't even really got off the ground yet. So there's a lot of scope in Tesla, which a lot of people don't realise. So we move down again, some fairly steady performance here. Tritax, Unilever and my Vanguards all holding their value. No major moves here, but I'm really happy with these. All of these, probably bar Visa, are really good dividend payers for me, so very happy with my holdings. If we move down and look at the allocation, as I've mentioned as we've gone through, Facebook is the highest at just under 7%. We've got Apple, Amazon, Dark Group, my all-world high dividend yield, Tesla, Segro, Alphabet, Visa make up the sort of top 10. No stock worth more than 7%, which is very intentional and something I'm very happy with. The only changes I would like to make here is I would like to improve or increase my holdings in Tesla and the Vanguard FTSE all-world high dividend yield up to probably my top 5, and I'd like my top 2 probably to be Amazon and Tesla, as I see those as the stocks with the most growth potential over the next couple of years. And that just about wraps up the summary of my portfolio. Hopefully we'll kick on again this week and we can get over that £2,000 profit mark in terms of capital appreciation. And if not, and the market decides to fall, we will see it as an opportunity. We do have cash ready to buy some more shares. So if that does happen, we'll be taking advantage of any deals on offer. So hopefully you found that interesting. If you are interested in how I set up my portfolio and what strategies I use, do check out 2 videos which I will leave on the end screen. One is my views on how to supercharge your portfolio, what stocks to choose and what stocks to stay away from. And the second one is building on that really, which is a video all about what sectors I think you should be avoiding in 2020 and which sectors are maybe dying a death, which have done well historically. So that's just about it for this video. I hope you enjoyed it. Please drop this video a like if you took some value from it, and please hit that subscribe button to support this channel. It is very early days. I think we currently have 23 subscribers. Thank you to each and every one of you. We do want to keep growing this channel. We have plenty of money to invest, so please hit that subscribe button and join us on this journey. For now, see you in the next one.